Good morning, everybody. Hey, welcome to Wednesday, April 17th. Hey, we've got quite a bit of earnings starting to float in. Not much on the economic front, but some interesting stuff we're going to talk about this morning. Hang tight. We are looking forward to today's conversation with Dave.
One more time. No. Morgan, Megan Trainer there, 105.7 Light FM. 19 here before 9. Time checking on your money and find out how your retirement funds are going. Even if you don't invest in the stock specifically, I'll bet you a nickel that what we talk about here affects the future of your retirement. Let's go downtown and find out. At the offices of Statler Financial Services, downtown Sebring, Phillip Statler's there. Phillip, good morning. Good to hear you this morning.
Good morning, Dave. I know we had a few technical difficulties yesterday, but glad to be back with you in full steam today, I hope, anyway. But hey, yeah, today we've, I'm going to say that maybe the onslaught of earnings season is finally starting to hit. There's a bunch of reports out today. We obviously don't have time to talk about a lot of them, but there are some good things out there that we do want to try to talk about today.
Absolutely. Lead off with the one bit of serious macro information that we think might move markets a little bit. China actually said their gross domestic product grew that more than it had been. So that's got Asian markets going crazy, and anything that provides a good base to operate off of for our opening never hurts. The big earnings report, as I understand it, according to the talking heads on national TV, is we actually have a financial that fired on all cylinders, according to their report, Morgan Stanley, right?
Well, we did. Morgan Stanley came out and they did better than expected. They came in at $1.33 a share versus $1.17 that was expected by the consensus estimates. The revenue also beat forecast. They had, they were able to deliver solid earnings despite kind of a slower start to the year, following that turbulent fourth quarter. Well, I found interesting, we have seen this now in the big banks pretty much across the board, Dave, is they've all pretty much beat expectations. I was listening. I don't listen to talking heads very often, but I was listening this morning to talking heads, and it was they made a few good points that I thought were worth kind of investigating a little bit. And I think I mentioned it on Friday when we talked about Goldman a little bit, but what we're seeing is that analysts' expectations have been lowered significantly. So when we say somebody beats estimates, well, that's the analysts have kind of lowered their expectations given on what's happening. But if we look at year over year, how these big banks and how companies in general are doing, we're really seeing a decline. When we look at Morgan Stanley, for instance, their revenue is down 7% from where it was the same quarter last year.
Wow.
Yeah. You asked me yesterday or day before about Goldman, the earnings per share of the first quarter versus I didn't have it. Morgan, I do. Morgan's diluted earnings per share was $1.39. The number I talked about earlier gave some modifications. But the first quarter last year, they're at $1.45.
Which about a 4% drop on earnings per share, if I'm doing my math in my head right.
Right. So we're not. I mean, we're beating expectations, but all that's to say expectations have been lowered.
Once again, confirming something that you and I have been saying for a long time. It's just we're just getting more confirmation and more data points to confirm it that we're doing okay, but things are slowing down by a bit.
Yep. And the other thing that was kind of brought to light was, so why do the markets keep moving up? Well, people got to put their money somewhere. And so, the FOMO, the fear of missing out, has started to affect the markets, I believe, and that people look at it hitting new highs, and so they're starting to pop more money in there.
Understood. The Morgan thing was interesting. Yeah, the beating expectations does not necessarily mean beating last year, as you just brought up very well. One thing I did notice, though, at the very least about Morgan is I think one of the very few financial entities that we've had reports from so far that have actually beat expectations on both the revenue and the profit side. The trend in financials is they just flat out aren't breaking in as much money as people expected them to.
Well, that's true. And so Morgan did beat on all sides there. So they're trading up almost 2% this morning before the market opens up.
Not a bad start. Well, let's talk about one of the glamour stocks because it was causing some buzz yesterday morning. They actually did report after the market closed last night. How did Netflix do?
So Netflix, they beat on pretty much both fronts. They came in almost 20 cents above estimates, 19 cents, I think, to be exact. Revenue was slightly above what Wall Street had projected. Their shares after hours yesterday were coming under some pressure. Now people have had a chance to digest stuff, and it's bounced back up. Um, but because they gave a little weaker than expected forecast, because obviously with Disney getting ready to really launch their streaming service, there's some concern about what that's going to do to Netflix.
I
And
was kind
so,
of wondering if they were going to say anything about that because it's got a lot of, well, the excitement over Disney, indicates that a lot of investors think they're going to take at least some market share or stem the growth of Netflix.
well, and that's true. And so I think that was the initial reaction yesterday when they had made their announcement after the market closed, was that that was going to be an issue. However, like I said, stocks kind of bounced back this morning, and I think that they were kind of honest. They said, "Look, we don't know what it's going to do to us. We've got our plan, but we don't know what this is going to do to us economically." And just putting it out there so people realize it could affect future quarters. They're trading up this morning right now 3.3%. So not a bad place to be.
Yeah, I don't think most stock, most investors would complain a bit about 3.5% increase after a guidance report that says we don't know what the Sam Hill's going to go on, right?
Exactly. So yeah, it's like, hey, I'm happy to get the bounce on Netflix, and then we've got a couple other things though. We've got some good news, but not good news in the share price, and that's IBM. Um,
Oh,
they came, yeah, no, we've been talking about them. And, hey, but last quarter they had a decent quarter, if I remember serves me right. This
I think
quarter,
we were celebrating last quarter on IBM. Doesn't sound like we are this quarter based on the stock price pre-market.
well, they beat on earnings per share, but revenue fell short.
Hmm.
And they've basically come out and said, you know what, in 2019, they've kind of forecasted out revenue, and it's below what everybody thought it would be. In this world of PCs and smaller computers now, they're saying, their mainframe business is obviously coming under a lot of pressure, and so we can continue to see IBM deal with that issue, and they're trading down almost 3% this morning.
And yeah, that is one of those. We flippantly referred to them as a dinosaur of the high tech business in the past, and they really are. And they've been doing a relatively good job reinventing themselves in the artificial intelligence field. But boy, when you move an aircraft carrier the size of IBM around, it takes a long time to reinvent the company, doesn't it?
It really does, and so we're seeing that today. That, hey, certain sectors are just not going to do as well within their business model, but they really can't get rid of them because they're the main support of that, that industry, and so there's still people that use mainframes and need them, and so there's still that little niche there for them to keep that production up.
Understood. Got any other indications as to how earnings season is going?
Well, we do have a couple more stocks coming out that came out. We have some transportation stocks like United Continental came out. They beat by 20 cents a share. So revenue came in a little below forecast, but we can imagine that's because of some of the issues that we're having with the 737 Max.
Hmm.
And they've kind of lowered their expectations for this year also, given the flight status. And so, but they're trading up 3.75% this morning before the market opens up.
That's good news. American Airlines, I know, grabbed some of the attention on pre-market trading for airlines by saying they had no idea whatsoever what the impact of all their 737 groundings were going to be, which always throws people into a bit of a tizzy, doesn't it?
Yeah, it does. Hey, and then on another transportation note, excuse me, we got CSX,
Yeah.
the railroad. They actually did well to this quarter. They beat by 11 cents a share. Revenue was in line, but they've been able to get higher prices for their seats and their transportation and goods and services, and they've seen a lower labor cost and lower fuel cost. At this point, this morning, they're going to open up over 4.5% up, and they're going to be at a new 52-week high at $79.44 right now.
I noticed they were on my big winner list. I guess they don't fly any 737s on CSX, do they?
No, I don't think so, and people may think that's a better option now.
I was kind of thinking they were a beneficiary there. Setting the table for this morning, it was a green day on Wall Street yesterday. Not exactly a headline maker, but still green. Dow was up by 0.25%, up just under 68 points. NASDAQ up by 24, which was just shy of 0.33%. Standard & Poor's green, but they were the lackluster wouldn't be the term, but the most conservative performer of the three. They were up $1.50. 45 minutes before we start trading this morning, Phillip, what are the indications looking like so far?
It looks to me like, Dave, we got green across the board this morning. The Dow's at 41 points. The S&P 500 is going to open up $7.85. NASDAQ's up 36.75. Gold and silver up slightly. Well, silver's up 0.6%, back up over. Silver's back up over $15 an ounce, 15.01. Gold is at $12.77 an ounce. So, and then crude oil, man, it's heading back up, trying to get to 65. It's at 64.44, and so we'll look to see what that does to gas prices here soon.
No, I hope not. I filled up yesterday, and I took advantage of a little dip, so I'm kind of proud of myself. Across the ponds, Asia ended up mixed. It looks like the traders in Hong Kong kind of called bull crud on the Chinese gross domestic product. They were off by a tinge. Japan was up substantially. Europe also mixed this morning halfway through their trading day. Phillip, needs some stability in my retirement fund. How do I make an appointment with you on the phone?
David, give us a call at 382-0037. Hey, follow us online at our website at statlerfinancial.com, and then like our page on Facebook, Statler Financial Services, where we post some information out there. We put videos up there, a lot of good information coming through there. And then join us every weekend for the Statler Financial Radio Show, noon on Saturday, 10 a.m. on Sunday mornings.
On our sister station, News Talk 7:30 a.m. Thank you so much, sir, and we'll catch you in the morning, all right?
All right, thanks, Dave. You have a great day. Good morning. Hey, we finished up. I'm glad you joined us this morning. I hope you found it interesting. There's a lot of new things happening out there, and just some interesting stuff that we're seeing there. Hey, again, I want to remind you that this week we're giving away a free report on tax strategies for retirees or those people that are getting ready to retire. And I think taxes play a bigger role than what people really start to think about when it comes to retirement. One thing you need to remember is that everything that's in your IRA and 401k, it's not yours. You're going to share that with Uncle Sam every time you take money out. He's going to get a part of it. And so having the right tax strategies is very important. So we've got a free report we're offering. All you have to do is text the word tax to 863-285-3815. That's right. Just text the word tax, T-A-X, to 863-285-3815. Thanks for joining us today. I hope you have a great day and look forward to seeing you again tomorrow.